It is that time again. It is time for a monthly bullet journal review. Currently, there are 5 stocks in my stock portfolio review: Antero Midstream, Waste Management, Archer Daniel Midlands, Mondelez International, and Occidental Petroleum. There are some good news in my dividend tracker. Based on what I heard in the news, Archer Daniels had increased their dividend from 35 cents to 36 cents. It may be a small increment, but a little goes a long way. Since I have made a loss in my stock portfolio, I had decided to put a right-hand reflection portfolio review. So based on my reflection, I am holding 5 stocks with a capital gain in 3 of the stocks, and I have made a loss in a cap of 2 in my counter. So the companies that have outperformed right now is on food staples and in utilities, while the most underperformed shares is on oil and gas sector. So this is because the event that's happening is due to the coronavirus or the COVID-19. So what I've seen here is that the effect is that there are less oil, so less transit, which had lead to an oil downturn. And people are panicking over how to get more food, so they have started to stockpile on their food. When they start to stockpile on their food, this will have caused an increase in the food staples. So here are some of my decisions which I have decided. Number 1, I decided to buy more oil and gas stock to average it down. When you average down on your oil and gas, that means you are able to get more in terms of your dividends in the future. Number 2 is to hold on to more cash and wait for the downturn to partially time the market. It may not be a perfect timing, but at least I'll be able to get some extra premium out of it. The third point I would like to highlight is to review on other industry and to tap onto other undervalued stocks. So what I've reviewed right now is that cruise liners and other food staples like snacking companies is another opportunity to buy in. Another thing that I could review on is on the retail sector. Since people are fearing, it is time to buy. As what Warren Buffett say, be fearful when everybody is greedy, and be greedy when everyone is fearful. I'm gonna share with you 3 steps on how to handle the losses in your portfolio. Step number 1, hold on and review on your company. After all, it is not a loss until you have sold off your portfolio. Ask yourself this question: why do you buy that company in the first place? Step number 2, buy more. At the end of the day, as Phil Town rule number 1 says, you're a consumer of investments. And when you're a consumer of investment, isn't it great if the price were to fall off? That means that's an opportunity to buy more. Step number 3, ramp it up with your call options. So what's a call option? A call option is an option or rights to buy that price of the stock in the future. So when you're buying into a call option, you're buying on a leverage to fix that price at that point of time so that you'll be able to buy more in the future date. If you have the confidence that the company will be able to go up in the future, why not buy a call option instead? So what are your steps if you made a loss? Leave it down in the comment below, and I'll see you next time.